Hey everyone, I'm here to do a user request on the British pound versus the New Zealand dollar, kind of projecting out for the next 3 years or so. So let's go ahead and take a look and see what I see here. Okay, all right. So first things first, we have when we first started trading this, and I'm looking at, let's see here, NZD. This is on the exchange, FXCM. I guess I could go to Oanda, and yeah, there's a little more history here, I suppose. So let's go ahead and take a look at this chart right now. Okay, all right, no, this is good. All right, so we have, I'm going to go from our high. The first thing I'm going to do is I'm going to do a fib pull on the high here that we've got, which is about 306, almost 307. Pulling ourselves down here to about 162. All right, so on this, let's see here what I can see, and actually let me do this. We'll pull it from here instead. That seems to have been a good technical pivot here. So on this fib pull from our high up here down to our low right here, we had basically a rejection at the 618 on this, and this was back in 2015 after creating the high up here in 2006, and then this low at the time, which was at about 2013, and then we had the rejection there at the 618. So we'll focus on that move first. And what I'm going to do is I'm actually going to use a pitchfork here, and on the pitchfork I'm going to take it from the top up here, right there, coming all the way down here to the bottom, and then going right back up here. All right, so when you have a move like this, of course, you're looking to meet the median again, which we did, and then on the way back up, we met the median yet again, and we had rejection, and then we eventually consolidated above it before we started to really move sideways, if we're being honest. But I do believe that we are in a bit of a trading range on this right now. So keeping in mind this trend line up here, which is going to be pretty important. I'm just going to go ahead and highlight this in lime green. I'm going to make it a little thicker because that's the area that we really need to focus on. As far as the weekly Stokes go, we are going to be moving down more than likely. We have this area right here, which is important. And that did not place where I wanted it to, although that doesn't look too bad either because we had lots of resistance here, but I still think that this area right here is also going to be pretty important. Actually, we're sitting on it right now. But yeah, so basically what I can see here, and as far as all of this trading goes, I'm going to move this down just a little bit. So from the dip that we had a few weeks ago down to about 193 and a break up above, it does look like we are going to move back down. But as far as the trading range goes, I'm seeing this area right here. I mean, this is pretty obvious to see. We have this trading range that is being created here, in the 181 range to about 205. And we have a little bit of a W formation, which does it has the ability to be bullish, but we've got to break above this. We did have a push a little bit higher. We don't really have any bearish divergence that I can see on this, so it does look pretty constructive. We were in a squeeze for a while on this, but then when the squeeze finally came through, it broke down. So we broke down after the squeeze. Wouldn't surprise me to continue consolidating here for at least a few more weeks before we do eventually start to move up. Forex in particular does tend to move a lot slower than other markets. But still, my usual, I would expect us to come back down here, maybe range in this zone before we move up out of this, and then buy it there. And actually, you'd be buying about the same level that it is right now. You're talking about buying at about 202, 203, when right now we're at 202. So, buying now for the long haul does not seem like a bad idea. But now, as far as what it's going to look like over the next several years, let's go ahead and clean the chart off here. and take a look and see what this could look like. And again, I'm just going to pull back my fib retrace from that same level all the way at the top. I'm going to come all the way down here to the bottom. It is very possible that we go back up to 251. And if we take a look at it from the bottom approach, I'm going to use my trend-based fib extension. If this was a 1, 2, 3, 4, 5 going up to there and moving ourselves back down here, we have to honor this. You know, the target again for this would be about 250. All right, so that does seem like it does seem pretty logical that we would go up there. So again, starting from down here, starting with a little bit of a leading diagonal all the way up to here, and then we're going down for the 2, and now we're creating a 1, 2, and then working on a 3, 4, 5, getting us all the way up here. This would be the 3, coming back down here, reclaiming this area of support, and then moving up to a 5. And the target for the 5, and again, this is all really hypothetical because you know, I'm charting something that hasn't happened yet. Moving from the 2 down here, going up here to the 3, and we'll just say for the moment that it's going to be at the 618. You're looking for a move down to the 236 or the 382, which again is going to be right down here in this area. So this is going to take some time. Right now I'm looking, you know, out here projecting in 2022, and then going up to the end of 2022. It looks like, you know, potentially January of 2023 for us to make our way back up to about 290. So yeah, I do think that this is pretty constructive for us to move up. You know, it does look like a little bit of a bottoming formation that we had down here in the dollar. I guess it's not dollar, in the 160 range. So yeah, I do think there is potential for this to go up, but we are currently at resistance. I would say you would have an opportunity to accumulate down in 196 instead of where we're at 202. Again, we're talking pennies. We talk about pennies all the time, but nonetheless, you do have an opportunity to get a little lower. Where I would consider, and again, we're on a weekly time frame, but where I would consider doing some stop lossing would be on this trend line here, because this last move down did not go as low as the previous. So this would be an area for stop loss. If you're an aggressive trader, I'll go down to a 3-day time frame because we've got a little bit of this going on as well. So I would be looking to potentially stop loss here, right? So if you stop loss at this area right here, which, you know, we're on a 3-day time frame, but about $1.97, $1.98, then you would have that opportunity to rebuy down here at about $1.84. So, you know, there's an opportunity for you to buy back down here. You know, we have 2 touches of this trend line. For us to have a third wouldn't be the greatest, which is why I would set stop losses here, but accumulating down here, if we do find a spring, that's probably a pretty good sign. So, you know, you could take the trade down here, stop loss just below. You know, I would actually take a stop loss personally down here at this bottom here, about 181, 182, instead of taking the stop loss on the trend line. But if you're aggressive, you could, you know, you could be a little more conservative with your stop losses if you want to, you know, catch a little bit lower. But if we do break down below 181, probably we're going to come down here and retest 174, 175. So that would be where I would be looking to buy if we do break down below this trend line. Of course, full disclaimer, this isn't really financial advice. I'm not telling you that you should buy or sell or anything like that. It's really your it's your money, your you know, your risk. So, you know, take my advice with a grain of salt. And yeah, right now I'm not seeing any bearish divergence. Honestly, I'm not even really seeing any true hidden bearish divergence. I do see that we are creating a little bit of a top, and that I do think we will start to consolidate. But this area here at 196 to 2, yeah, that's where I would be looking for our support to be, and I'd like to see us consolidate here before we started to continue to move up. But it is again possible that we come back down here to like 189 or 185, somewhere in that area. But yeah, I do think that there is potential long term long-term meaning weeks and months, for us to move up to 250. That's where I'd be looking to take profit at 250 and then to reaccumulate here about 220 to 230. I would layer in buys. If we are able to get up to the zone, I would layer in buys from 220, 225, 230, 235. So I'd have 4 layers down here from 220 to 235, and then take that ride up to 290 and take profit along the way. I'd start taking profit at 275, 280, 285, 290. That's where I would exit my position completely. That would be my strategy, super long term. So there you have it. If you have any questions, feel free to let me know. Otherwise, I'll talk to you all in the Discord.